You know, conventional critics and conventional mainstream analysts, they don't get the crypto economy, they don't understand Bitcoin, and they hate volatility. And those are the people that would tell you, take all your money, put it in a bank account yielding 1% interest and just don't lose it and don't bother us. But when we embraced the Bitcoin strategy, we did it because we knew that if we held our cash in a bank account, it was going to lose 20% of its purchasing power per year. And it has, as predicted. The money supply expanded by 40%. Single family homes in the US have increased in price 40%. If you had $500 million, it would have bought you the 40% less today than it would have bought you 2 years ago.
Michael Saylor and MicroStrategy were recently in the news after the software company announced that Saylor was stepping down as CEO to assume the position of executive chairman. The announcement caused so many conjectures and half-truths from the mainstream media with headlines like this. MicroStrategy founder Michael Saylor once lost $6 billion in a day. His big bet on Bitcoin might sink him once and for all. And this. Michael Saylor bet billions on Bitcoin and lost. In a recent interview with Stansberry Research, the American investor and entrepreneur speaks at length about MicroStrategy's Bitcoin strategy and how the business intelligence company has fared since August 2020, when it bought its first $250 million worth of Bitcoin. Due to the relentless money printing by the Federal Reserve, the dollar's value has been declining pretty fast since the pandemic, way faster than it was before the global health crisis that shut down the world. With such rapid decline, holding cash was out of the question, not even in banks which pay abysmal interests to savers. Saylor explains that this painful realization led him to adopt the Bitcoin standard for MicroStrategy, and despite these damning headlines, the newly appointed executive chairman does not regret the decision. Please watch, share, and like this video as Michael Saylor talks about taking the plunge despite Bitcoin's infamous volatility. He also shares some important suggestions for all Bitcoin investors and prospective investors. If you have any thoughts or comments on Saylor's interview, please share them with us in the comments section. It would make our day to hear from you. You can also subscribe to the channel and check out our other impressive collection of crypto and economy-related videos. Thanks for watching.
The facts of the matter are, on August 10th of 2020, we embarked on a Bitcoin strategy. And when we did that, the enterprise value of our software business was about $66 a share. And as I'm speaking with you right now, the stock is trading $329 a share. Our shareholders have made billions of dollars since we started this strategy. No one's lost. If you actually look at the performance of Bitcoin since we actually bought $250 million of it and embarked on a Bitcoin strategy, Bitcoin's up 101%. That's the S&P's up 23%, the Nasdaq's up 15%, gold is down 12%, bonds are down 15%, and silver is down 28%. So in fact, Bitcoin smashed every single asset. The only thing that outperformed Bitcoin in that time period is MicroStrategy stock, up 166%. So we actually performed 1.6x Bitcoin. Now, if you look at what we could have done, we could have competed with the enterprise software companies in our industry. The best performing enterprise software company in that time period is Oracle. Oracle's up 39%. MicroStrategy's up 166%. IBM's up 2%, Salesforce is down 4%, SAP's down 40%. We're definitely not losing. Now, if you want to compare us to the best companies on earth, the strongest companies on earth that are more powerful than governments would be Google, Apple, and Microsoft. Those three big tech companies are up 58%, 46%, and 34% respectively. Amazon down 11, Facebook down 35, Netflix down 52. MicroStrategy up 167%. And one last factoid, out of the 500 S&P companies, there are only 14 companies that outperformed us in the time period. We outperformed 97% of the S&P. And the ones that outperformed us, you could have guessed, are like energy companies, and they were selling oil when oil hit $0 a barrel, and their stocks smashed back. So we're totally fine. I'm fine. The company's strategy is working well. If you had said in the second quarter of 2020, I want you to come up with a strategy for a low growth, mid-size software company to outperform every asset class, all big tech stocks, and every enterprise software company by a factor of 3 to 10, right? This is the only one that you could have come up with, and we actually did it. I think what throws people off is that the stock got volatile. Like the way we've done it is with volatility. The company's stock traded a few $1 million a day when we started. Now it trades hundreds of millions of dollars a day. The open interest and the options have exploded. The stock, has exploded up, exploded down, exploded up. It moves all around, just like Bitcoin, which has gone through almost 3 cycles in the past 2 years. So I would say, to summarize, conventional critics and conventional mainstream analysts, they don't get the crypto economy, they don't understand Bitcoin, and they hate volatility. And those are the people that would tell you, take all your money, put it in a bank account yielding 1% interest, and just don't lose it and don't bother us. But when we embraced the Bitcoin strategy, we did it because we knew that if we held our cash in a bank account, it was going to lose 20% of its purchasing power per year. And it has, as predicted. The money supply expanded by 40%. Single-family homes in the U.S. have increased in price 40%. If you had $500 million, it would have bought you the 40% less today than it would have bought you 2 years ago. So we had to do something for our shareholders at the time. And that something was buy high-quality digital property. And our choice was, we could suffer a non-volatile slow death, or we could get on a bumpy lifeboat, a big orange lifeboat, the Bitcoin lifeboat, and we're going to get tossed around in the ocean, but we're going to float, and we're going to appreciate over time.
When Michael Saylor bought the first of MicroStrategy's now almost 130,000 Bitcoin, the crypto asset was trading below $10,000. Last year, we saw the same crypto asset climb to almost $69,000 in just a year. Though the bear market has caused some losses, we are nowhere near that price range, and there is very little evidence that we could get back there. So all things considered, Michael Saylor did make a good bet when he asked his board of directors to adopt the Bitcoin strategy. In his interview, the MicroStrategy executive chairman also gives his opinion on the best way to hold Bitcoin. He explains that investors that have made a long-term bet on Bitcoin, even those that bought just 2 years ago like MicroStrategy, are still in the green. As such, Saylor wants all investors to think of Bitcoin as a long-term, high-value digital property capable of creating generational wealth rather than a get-quick-rich scheme.
When I started buying this stuff, Bitcoin was $9,000, $10,000 a coin, and we've just been consistently accumulating Bitcoin. We have not sold any Bitcoin. And if you're a short time horizon person and you want to look at making a trade in the past 3 months or 6 months, just about everything you could have bought in the world in the past 6 months is a losing trade if you have a short enough time frame. But if you have a 2-year time frame, Bitcoin's winning. It's winning over 4 years. It's winning over 6 years. It's winning over 8 years. And I just like to be in business more than 2 years from now. So that's why we did it. I think that the way to think about investing in Bitcoin is you should only invest what you're going to hold for 4 years or longer. And ideally, it's generational wealth transfer. And then you should dollar cost average into it. And for the average person, if they dollar cost average into it as a strong long-term store of value, they'll be fine. And the metric you ought to stare at is probably rolling the simple 4-year moving average, right? And if you look at the simple moving average over 1,458 days, it very rarely touches that point. It went slightly below it in the depths of the crypto crisis, and now it's trading above it. That number is 22,266. So if you think of that and you say, I know I'm going to hold at least 4 years, then it isn't that anxiety inducing. If you have a short time horizon, like you want to make money in 4 weeks or 4 months, it's going to be much more stressful because it is a volatile asset. And the volatility impacts 2 types of people. It impacts people that are short-term investors, that they want to make a quick buck or they just never want to lose money. And the volatility also impacts public companies or companies that rely heavily on GAAP accounting, because the volatility is detrimental to the accounting treatment because you have to always write it down. You can never write it up. And so you end up with a circumstance where you could be holding $1 billion and it looks like you have $200 million and no one can tell the difference unless they go to the trouble to figure it out themselves, and that's very opaque. So I would say that people that really are fixated upon GAAP optics, right, they'll be a little bit troubled by it. And then people that have very short-term time horizons are troubled. But for the rest of the world, it's a pretty good idea. It's the best. I've just pointed out to you, we've outperformed every asset, every big tech company, every enterprise software company, 97% of all the companies using this strategy. So if the volatility is the price you pay for the performance. And if you can't stomach the heat, right, you can't be in the kitchen. So I would rather win in a volatile fashion than lose slowly in a non-volatile way.
Meanwhile, Bitcoin has been on a roll all week. With BlackRock's announcement of a Bitcoin fund launch, the crypto asset nearly captured $25,000 twice during the week, finally ending the week above $24,000, its third consecutive weekly finish with a higher price. As of press time, the largest cryptocurrency by market cap is trading at $24,827, a 7.90% increase in 7 days and 24.27% in a month. Still riding on the merge wave, Ethereum, the native token of the Ethereum blockchain network, has also made significant price gains, currently trading at $1,911, an 18.94% in 7 days, and an impressive 81.84% increase in the last 30 days. Cardano is another top cryptocurrency that has had an impressive performance this week. First, it lost its position as the 7th largest crypto by market cap. Then it quickly reclaimed that position. Now, merely days later, it has flipped XRP to become the 6th largest cryptocurrency by market cap. The crypto asset has also gained around 5% today alone and is now trading at $0.59, its highest price since May. Like Ethereum investors, the Cardano community is evidently reacting positively to the recent update about the Vassal hard fork. What do you think about Michael Saylor's interview? Please drop your comments and observations in the comment section. Give this video a thumbs up and subscribe for more videos. Thanks for watching.